financing, maybe you're refinancing your home, it can be stressful. And knowing which loan is best for you can be very stressful. Steve Currington with Currington Mortgage is here to tell us all about the different loan types that we can get when we're talking about financing a home.
Right.
Thanks for coming in.
Yeah, good to see you again.
All right, now, they were just talking about a different Oktoberfest, but you were at Oktoberfest last night.
Yes.
For the corporate night, and you got a caricature.
I brought my caricature. Can you see it? And I'll turn it this way.
I think it's actually it's a true representation of what Steve Currington looks like. Muscle man extraordinaire.
There we go. It's exactly like me.
And you really have that tattoo on your arm.
Maybe.
Maybe, maybe not. You'll never know.
Maybe.
SteveCurrington.com.
There you go.
Okay, so let's talk about the different loan types that there are out there, because we hear about different ones: the VA loan, the FHA loan, the USDA. I mean,
you're getting educated, right? You've learned a lot
from you. Yeah, in the past year, I've learned a lot.
There's lots of different ones, and all depending the one you get is really going to depend on credit score and down payment. A lot of times, most people that have a sizable down payment will do a conventional loan. And if you're a veteran and you don't want to put any money down, obviously VA is a great option for you because it doesn't require down payment. That USDA loan we've talked about several times. It's a 100% loan also, income sensitive, and it has geographic restrictions, meaning the house has to be in a certain area, and you have to meet the income requirement. Now,
what's the income requirement?
It's based on household, how many people in the household. So if you're a 1 to 4 person household, it's at, I think, $84,750, something like that. So it's not like you have to have a really low income in order to qualify. And then it bumps up to almost $98,000 if there's more than 5 or more people in the house. So that opens that window up for a lot of families that are a 1 to 4 family and maybe make $50,000 or $60,000 a year, and they maybe having an issue being able to save for a down payment. That's really what this program is designed to do, as well as develop outlying areas, because they don't want you to be in Tulsa. So you're going to have to be south of the river in Bixby, Glenpool, Owasso, east Broken Arrow, past county line.
And this was the USDA that we're talking about. Okay.
Yeah. Now people call it a USDA loan, an RD loan. I've heard it called an R&D loan, rural development loan. It's all the same. It's that we talked about it before. It's the meat loan.
Yeah, that's what I mean. That's the first thing I think of. That's why I'm like, I don't understand. What does it stand for? What does USDA stand for?
I guess it's the Department of Agriculture. Same thing. It's just a division of that. Yeah.
Oh,
so
okay,
it's the same
with the rural. Okay, that makes sense then.
Yep. I don't ever know. I think that's what it is.
We'll check back and get back to you guys. What is the easiest loan to get approved for?
I don't think that any of them are easy anymore.
Okay.
But as far as guidelines and qualifying purposes, those government programs like FHA and the USDA program are a little bit more relaxed on credit score than a conventional loan would be. Same thing with VA. Although they all have their little nuances. But conventional has really been the loan that has been taking the beating on guidelines and requirements and credit score. If you get into investment properties, if you're buying an investment property, it requires a much higher credit score than we used to. We used to be able to do 100% on an investment property. No down payment on an investment property at a 600 credit score. And now you have to put 20 to 25% down, and you have to have a 720 just to be able to do it. So that's where that, it's the pendulum kind of swung to the other side, and they're making that guideline tougher. So those conventional type products are just a little tougher on the qualifying of it. The debt to income ratio requirements lower. There's some little things like that, but all of them have their little nuances of difficulties that you can run into when trying to qualify.
And if we have more questions, I know this is a lot of different loan types that we're talking about. Next Thursday, there's an open house at your place, right?
Yes, we're having it's a after hours with the Bixby Metro Chamber at 5:30, and everybody's welcome to come hang out. We're gonna have some drinks and have some fun, and
you can meet Steve Currington.
Yep.
Maybe you could get, I don't know, a caricature done of you. I don't know. Thank you so much for coming in, Steve.
Good to see you, Lacey.
All right, now you can reach Steve at Currington Mortgage Company. Give him a phone call at 918-394-5626. You can also email him at steve@curringtonmortgage.com, and you can also log on to curringtonmortgage.com. Yeah, all right, here we go. Yeah. Get one of these. All right. Now, don't be left shivering when the first cold snap comes. How to get your home prepared. And we also want to see your pictures of your kids in their Halloween costumes. How it can win you great prizes coming up.
Hey,